Hello, this is Vance, and this is Thursday, September the 24th, 2015. These are the CL trades for today using the slow hand method for price action. I want to chat a little bit about something that individuals are often curious about. That's context as far as the market is concerned. What really is it? I define context as the market tendency to do something over a particular period of time. And you can recognize the context after the fact. For instance, you can say that if you're looking at, let's take a look at yesterday, for instance. You can say that what's the context of yesterday? Well, yesterday's trading, you can say very simply, it was a trend down. Okay. After it finishes, you can see it. So here, the context of the market was a trend down. But the problem is that what exactly is the context of the market when you're right here? Is it a trend down? Well, you can know definitely, or is it moving in a range? The point is that the context of the market was a trend down, and so that's what you'd have to say for yesterday. The challenge with trading is to try to recognize what the context is, and based on what your trading plan is, and trade that plan based on what you believe that context to be. And I mean believe it because you won't know 100% until after the fact what the context for the day was. And that's really the challenge, is to try to meet up your contextual outlook for the market so that you can trade it. And then at the end of the day and afterwards you say, well, I was right. That's what the context was. So that's where that's really a challenge. And unfortunately, you're not going to know that until it's finished. I guess the best thing to for any of you that you are familiar with market profile, that's basically the same thing. That's the same thing. Remember, what we're looking at is we're looking at prices, or the price of a particular commodity, or in this case, oil. We're looking at the price of oil in the present. We're looking at the price that we have the information, historical information of the past of oil, and based on what the historical information is and where price is right now, and those what we perceive as buyer and seller tendencies, we are attempting to make predictions, or to take steps or to trade based on where we think those tendencies are headed in the not too distant future, and in the case, of course, on a daily basis. So we're using historical information and the present price to try to determine what the future price is going to be. In other words, we need a crystal ball. Well, no one has a crystal ball. So what we're attempting to do is to look at those previous patterns, things that we've seen over many hours of sitting in front of a screen, looking at how prices develop and what tendencies are as far as those traders are concerned in the past, to try to anticipate future price movements. And we can use the term context to determine where those tendencies are going to be. So there are certain things that I do to try to delineate or try to put into perspective the what the context of the market is going to be. Is it a trend day? Is it trending up? Is it trending down? Is it ranging? Where are areas of support and resistance? Because that's all context. If I see an area right here, for instance, on this particular chart, I see this first touch and we have a second touch right here. My idea is that in this area, and let's call it from 4409 to 4396. So in that period, those 13 ticks, what I'm thinking of is that over that in those ticks, was that right? 96 to 09. Yes, in those 13 ticks, I look at this area that I think in that area there's going to be some area of likely maybe some area of support. If price comes back down to that area at some time in the future, by looking at the left side of the chart, and this is this case right here, I think that there may be some support in this area, considering that price made this attempt to go down on the 800 tick chart on two separate occasions, but couldn't get back down to where the daily low was. That's something that I'm keeping in mind. The other side of it is that when buyers had or sellers had attempted on two separate occasions to take price lower, it didn't find that price lower, and as a result, we might get another leg up that's equal to what the buyers had moved the price just just a little while before then. So we can see that price is moving. That's where I get the idea with, as far as the measured move is concerned. Price, the buyers had taken price up to here. There was more buyers, or buyers were more exuberant than sellers. Sellers tried to pull it back. There's more selling here. Buyers were not interested. They pull it back up here. Sellers again tried to dump. It couldn't hold down there. And so we'll likely get another move to about the same length as the move that we just came through. Now, did it turn out? Well, not quite. But certainly there was enough movement to get out. And as you can see, when we got to, when we got to these tops here, when we had the double top, price attempted to go up the first time, it failed. Tried to go up the second time, it failed. Almost a third time, didn't quite make a new high, but then you see this almost a trap. So again, an idea that where are we going to head down as far as this price is concerned? Well, obviously buyers ran out of gas here, and as a result, the sellers got control of the market and was able to drive price down to this area, but only to near where I said this area was. Now, again, 15 ticks I use, and every time that gets down to this area, I would say ultimately your stop should be below this previous low on the 800 tick chart. So looking at limiting in or buying in when you see a decent setup on the 800 tick is not a bad trade to take, particularly when it's in this particular range. Is this a second entry short? Well, unless it kind of breaks down here and really tests this area, I would say no. But we didn't see that. Did we get a measured move? You can see from the context from the other side. Are we anticipating a measured move? From down here, it pulls back twice. Could it be that it would go down to this area? It could. So ultimately what you want to do, if you're going to limit in, try to limit in below where this target is going to be, if you have the wherewithal to do so. Now, you have to figure out that you're doing all this and trying to make these adjustments, or try to keep these disparate ideas in mind while you're live, while you're trading. And that's a challenging thing to do. What lists do you go through? How many ideas can you hold in your mind simultaneously before you take the trade, before you're confident in taking the trade? That's where the challenge is. It's like a football quarterback getting to the line of scrimmage, and in that count, looking and checking off how the defense is set up, how other individuals are setting up, where's his receivers, what plays does he really have, what are outlet plays. I mean, at the professional level, they're making those calls, and the very best quarterbacks are able to check off that list very quickly. What makes the difference between a Tom Brady and someone who's not successful in the NFL? It's his ability to go through that list, that mental list, very quickly. He can't have it written down. He doesn't have the time to check his playbook in his hand. It has to be in his mind. It has to be in his brain. He has to be able to recall that instantly. And then once the play is off, he has to be able to step back and be able to check those and be able to execute immediately to be successful. Does he do it right every time? Not really, but his passing percentage is pretty good. I can remember a trader once saying that if he would think that an NFL quarterback would make an excellent trader because he can do these things. He could see that he could keep many ideas in his mind at the same time. So an NFL quarterback would be a good trader. But why would he be? If he was equivalent to Tom Brady, he wouldn't have to trade to make a living. Anyway, I'm getting away from the point. I hope that you have an idea of what context is. And that's just an introduction. In order to develop a really solid idea and description, you have to work with it on a regular basis. And you have to spend the time to really try to get in the bar to understand where markets are heading. So let's kind of step back a bit. I'll talk about the overnight, and I'll talk about the trades for today. But I hope that's enough of an introduction to context to give you some idea of what I'm talking about. I hope it's not too confusing. Anyway, when you look at what happened overnight, we had this price came down from this overnight. Yesterday, when prices trade up, now the original high was at 45.17. You can see, the original high in the overnight was 45.13. Price moved down in the overnight. This is at just before 9 o'clock. You see price moved up here. The real first trade that I saw is after now, our price can continue to fall off. Well, you don't know that. What I looked at from here is that when price broke this channel, it broke up, pulled back the first time, pulled back the second time, a place to get in right here. Looking for, as I said earlier, a measured move. I was expecting maybe it would come back to here. I don't know if this was really the first move and the second move down to here. I mean, this is basically a second entry long. You see price made a new low, a new high here. First entry pulls back second entry. It's a pretty strong bar. I marked it in green because, again, we just came off of this really low, movement on the overnight, and I don't know where hit price is going to be heading. It's relatively close to the open as well, but ultimately it did move up. You would have gotten your 15 ticks off. It didn't give you a lot of, wasn't a lot of room. I mean, it just made it until it broke down. And if you see this from the perspective, if this is the move here, if this is the first move, first pullback, second pullback, it doesn't really afford you a lot of room before it does turn around. I mentioned this is a second entry short. It's really not specifically a second entry short because these two bars are the same. Price makes a new low, first entry, pullback, second entry. It's really more along the lines of like limiting in at the low. In this case, I would have tried to limit in here, especially when this bar completed. So you can see there's rejection here. It looks like a trap. Price came back in, and if you drop the limit order here, you would have gotten filled if your stop is above here, and then it gave you the opportunity to get out. It went down and moved down to right to the double bottoms tested here. You can see the testing right on the first, and then price couldn't go any further down. Now, what did I do as far as a measured move was concerned? I had this to here. I figured a first pullback, second pullback, and the pullback was about to this area. Didn't go down. I mean, it didn't make it all the way down. It really stalled, and you see prices kind of stacked up here. This is a second entry long. Price makes a new high here, pulls down. First entry, pulls back down to here, and then there's a second entry. I think it was a bit of a trap. Again, I marked this one in blue. It should actually be in green, I guess. But the only way I looked at this is that if you could get your stop below these ones right here, you'd have been fine. Again, you'd have to limit in. In fact, that's what I'm going to change this to. This would have been a limit in trade. This was limited in. Dark green. Okay. You drop an order down below here. With the idea is that right on this area of support where these closes are, somewhere in this neighborhood, you'd have been fine. You can see price moved up here. It's a breakout pullback. It didn't afford it. When it got to the top where these double tops are, it obviously stalled again. First pullback. This is the second entry long right here, in this direction. But it's not a great bar. It's a doji. See how it completes? Went down and tested up. This is a better bar, and if you stack them up, again, looking at the fact that if now the new low is right in this area, limiting in isn't necessarily a bad trade, particularly if it allows you to get out near these tops like this. Because ultimately, what I was really looking at again is that you have a move within a move. Here's maybe the first move pulls back, second move. But I'm also thinking that on a larger basis, we're going to have a move up here. And we have this first pullback, maybe a second pullback to here, and that we're going to have a move in this direction. And you can see that when this is a kind of a continuation pattern, price, and this is another contextual idea, when prices move up into a range, if you consider this a range, and I consider this a range, generally speaking, prices will move up and out of that range by about the equal amount as it moved into that range. So if price moved to this equal amount, we have this pullback, and when it finds support, let's call the support the low in this section right here, or even if it's down here, the low in this section allows us to price to find a support and head up a little bit higher. And you can see that this leg up got us to this before it actually turned around. Again, when price move up to here, and if you say this is the first move up from this aspect, we see that we have a first pullback, price breaks this channel, pulls back again, and it fails down to here. Now, why not a short on this area? You could have taken it. What I didn't like about it is that by the time you get a decent entry bar, this long bar here, it doesn't afford you a lot of room, and you have to also be conscious of that how much room you have to the bottom of this measured move. So if this is the move, this is the first move here, we have this first pullback, second pullback, you can see by the time this bar closes, it puts us really close to where we had this hesitation a little bit earlier, and it gets us this measured move. If you look at it from your 15-tick stop box, even though it's not quite good enough for the stop, unless you limit it in, the support would be right here. And you can see that even if you got in here, it allowed you to get out. I mean, if it pulled back like this, hesitation, if you have your stop in there, I would be looking at closing that trade out, because this is really not this is almost like a failed second entry short that turned into a second entry long. And that's the next aspect of this. Price pulls back down here. First entry fail. Let me get rid of this. Get rid of this. Second. So price pulls back to here as first entry, pulls back, second entry long. And I like this one better because you can see that we've got these double bottoms across here. We're within this area right here as far as the stop is concerned. If you get in for that, you can see right here, we're very close to these double bottoms here. If prices, we've got resident, buyers here that push price up to this leg. We've already tried, sellers tried to take it down. It stacks up right in this area. And so it looks like buyers are ready to at least control it up to this double top right here. And as you can see, you've got room to get out. Here's the double top, and you see price kind of shot up here. Once it did hesitate, by the way, got up here, pulled back, and then really shot up here. And this was the second leg. This is the leg right up here. Okay, first leg. And where the second leg is. Here's the measured move. So the measured move came up to this area, got to here, and then we had immediate hesitation. Pulls back. First pull. This is second entry short right here, but this is within the channel. It breaks through. This looks like a decent trade, and it gives you enough room to get out to the bottom. But you can see price really failed very quickly. First pullback failed. Second pullback, and here's another very strong bull bar right here. Now, I marked this one in green because look at the distance. Your stop would have to be up here, so you have to limit in on this one. And you know about limiting in, but it gives you enough room to forward before it gets to this double bottom right here. You see, there's enough room to get out. This is a little bit better stuff. It's a better trap, so it's almost like it's first down. So it's almost like a second entry. This is your first pullback. This is your second pullback. Remember, close is close enough in trading. Even though this is a little bit lower, what I'm saying is that you can see definitely there's two pullbacks here. Here's a pullback. Here's a pullback here. Remember what I said about yesterday as far as that range idea, if you recall, where prices were you had red bars and green bars beside each other that moved very rapidly between the range until it got to the point where you saw red bars and green bars side by side, almost stacking up, moving in the same direction, but more resistance. So when you see areas like this is strong selling right through here. See, mostly a majority of red bars. Pull back here, even though it's lower, this is like hesitation. This is hesitation. And then you see this resume. Now, once we get to this bottom, you can see this is a turnaround pattern. This turnaround pattern prices, this is a second entry long from here. First entry, second entry long right down here. But we still haven't, maybe we haven't completed, even though we're close to exhaustion. So that's the other side of it. We've got the first move down, we've got the second move down. It looks like two moves to me. Price pulls back, fails, and then another move up. This is the second entry long right here. This one here, it's a strong rejection. We're going to maybe retest the high or something like that, but you can see prices moved up. Now, you see once it broke through, if you didn't get it on this one, you might have taken this trade right here, which is a breakout pullback long. And even though it's a doji, see price came up here, pulled back, couldn't hold, closed almost on its high. So this on a shorter time frame would have been a breakout pullback long. And so this is, and prices moved up, but you can see now they start stacking up right here. Now, when you have these dojis side by side, it does move up, but there's resistance. And this is where we drop into another range, right in this area. So where it starts to range, you can see these bars are side by side, ranges down to here, double bottom, second entry long, moves up to here. If you're going to sell, this is a strong resistance, second entry short. But again, like sell, you have to put a limit order in here. Same with, it's true right here. These are limit orders. That's why I said you could have taken these with the idea that it's in a range. Where is it going to be heading? Well, if we look at it from a contextual standpoint, here's what I had for previous resistance here, support. This is a slightly lower resistance or support. So when price comes down to this area, we might be testing this area. It does go down to this where this double bottom was, pulls back, goes down again, and then right here is a second entry long. Price pulls back, breaks the channel, pulls back to a new low, and then it heads up in the other direction. Why do I mark it in green? Because these are two strong bars here. You're really going against the flow. The idea is that how much further down are you going to, how do you get into this particular trade? Wherewithal to get in here. Price makes its way up. Again, it meets the resistance where we have this range. Does pull back somewhat to this area, and now we have the first leg up. Here's a second move up. It fails at the bottom of this range, and we have moves. Price breaks through the top of this range right here. So you can see this limiting in down to here. Anytime you could limit in because it gives you enough room to get out. That's it. Nothing else to talk about. So this has gone on 20 minutes now. I hope that's clear. Talked a little about context. Talked a little about movement in the market. One last thing. I want to show you what you could see. Now, once you have these areas in here on a wider frame, this is the movement right here. It's almost like this is a channel. See this channel? Price is moving up in this area. And this is also another subsequent channel. Price is moving somewhat higher, you see. And that's it. So you see a channel in here, channel here, channel from the overnight. Not really is there a bigger channel here? It's really more like any larger than that. We're looking at, see the resistance areas, where the target should have been. And let's see where price got close, particularly today. So you can see these double tops right here, these areas right here. You see right across here, there's resistance. When price got up here, it turned it down. We see this area. We had this right across here. Okay, right across here. More of a midline right here. It kind of overshot in this area, but then it failed at the top. And that's something that Mac would talk about. I mean, this is kind of a continuation pattern. Price moved up into here, bounced around a bit, and then moved up and out of this. This is near the end of the day. This is up to 4, and this is kind of late. So you can see, hopefully you can see that the contact, what I'm thinking about as far as pricing is concerned, and how I try to anticipate those movements. Anyway, that's it. If you have any questions, please let me know. This is Vance. Bye for now.